All right, let us go live. Webinar. Predictable part 2. Financial freedom in 3 to 5 years. Okay. And 3 to 5 years. Learn how to build Okay. Here we go. Let's see if we can hear properly. Let's see if the mic is. All right, so good day. Welcome everyone to the live stream. This is Adeposi on the Wealth Webinars, and we do this every Tuesday by 12 noon. All right, so good day. Welcome for now, and I'm excited to be hosting this. We're going to be talking about the predictable path to financial freedom. The predictable path to financial freedom in 3 to 5 years, and I'm very excited to be hosting this stream, hosting these shows, because I know the impact that it can have in our lives. Okay, so welcome. If you were here last week and you're here again, welcome back. All right, so my name is Adeposi. If you don't know me already, I'm the founder of the Personal Wealth Academy, and this is one of my most privileged assignments or missions that I undertake is to teach people about building wealth. And the roadblock that a lot of people have when it comes to building wealth is thinking that they don't have money to start. So you're waiting to when you've made a lot of money before you begin to take steps to build wealth and to basically take care of your financial future. So you get people saying things like I never chop, na person we don't chop go save, or na person we don't chop go invest. So these webinars are meant to bring up those conversations and let us tease out those critical issues, those practical issues that we face. But not only that, we not only want to talk about it, but we want to find solutions that work for our context and our current reality. So if you read a lot of books or watch courses or best practices globally, those things may not necessarily work in Nigeria because of our prevalent situations or circumstances. Okay, so what's working now and what can you actually do? Financial freedom is possible for anybody. Okay, if you are dedicated, if you are consistent and disciplined, you can become financially free. But the challenge is how long will it take? Okay, and I think over the last couple of years I've found a formula, some principles that you can apply to shorten the time frame. I don't want to be financially free in 20 years. I want to let go of that burden in 3 to 5 years. And if that is possible, then it's a worthy cause to actually pursue. Don't you think so? If it's possible to actually become financially free in 3 to 5 years, don't you think it's something you should actually take a serious look at? All right, so that's my rationale behind going this line, and I think I've seen a little bit of light, a little bit of breakthroughs on this journey, and that's what I would like to share with us on the wealth webinars. And at the end of the day, I will also take questions if we have anybody that has questions about what we are talking about, and then we'll answer them and we'll call it a day till next week. All right, so please let me know where you are watching this from. If you are joining live, type live in the chat, and if you are watching the replay, type replay in the chat box. This helps me to be able to gauge the responsiveness, to gauge the reach, and basically optimize this and become better as I do this every single week. All right, so let me know where you are joining from, your city and all that, and then we'll go right into the show. Okay, so basically the wealth formula is simple, and this is step one. All right, this is step one, is talking about making money. How much money do you make? All right, if you want to build wealth, you cannot build wealth without an income. That is the starting point of wealth creation. Wealth creation is about preserving the value of your gain. Let me put it that way. So preserving, extending, or multiplying the value of your gain over a period of time. Now, that's my own definition, my personalized definition. So you have to have gain. You have to work and get something, and that thing that you have in your hand is what you're trying to preserve. So if you say wealth preservation, right, you're trying to preserve something you've gained. Wealth acceleration, you're trying, or wealth multiplication, all right, multi-generational wealth, all these things are talking about, all right, somebody made something, but he didn't just lose it or squander it, but he was able to actually preserve it. He was able to grow it, multiply it, and that's how I see wealth. So it all starts with making money. All right, if you don't have an income, as I always say, maybe wealth creation in terms of the way we talk about passive income, investment, things like that, they're not necessarily your first priority. All right, if you don't have a steady income, this is where you need to focus on. So I believe, and even if you have a steady income, if you are going on this path of accelerating your wealth, you have to look at either accelerating the income, increasing the income, or consolidating the income, because we're going to be building wealth on this thing. So we don't want something that is 10,000 today, 50,000 tomorrow, 10. We want something steady. Or I made money this week and next week I didn't make any money. I made money this month and for the next 3 months I didn't make any money. We want something that we can plan with, and that's why the income is very important. So when we talk about income, we have employment income. Now, employment income, I used to bash employment income until I had understanding. And obviously, it depends on how you look at it. If you go with employment income alone as your total source of livelihood without any plan, any backup, then maybe you're pushing it too far. But I don't bash employment income because it actually gives you the seed to begin to sow into your financial future. So what you get as a salary it's supposed to be a seed to plant or to grow and nurture your financial future. Right? And for that reason, employment income is extremely important, and it's extremely beneficial because number one, it's consistent. All right, you're getting this fixed amount of money every single month. That's something a lot of entrepreneurs are missing out of. A lot of entrepreneurs are making some money but losing it all because of bills and expenses, and they're not profitable yet, and so their own personal income is not really steady. Okay, that's something I'm personally struggling with as well as an entrepreneur. How to juggle, how much I pay myself from the business, and also keeping the business running and all that. Okay, so if you're working in a job, you're making a salary, then you can take a part of that salary and begin to use it for your financial freedom plan. If you're working on a business, you should be able to have access to more money. If you can scale that business, there's leverage there. How can you grow the business, expand the business, enter new product lines, new markets, and then generate more capital so that you can pay yourself more, obviously, and then you can invest properly. So that's the first step. Now I want to talk about something, and please, if you're live on this call, let me know in the comments, so that we can track and we can have a conversation. If what I'm saying is making sense, type yes, makes sense. Give me some feedback so that I can know that we are together. I want to talk about making money versus growing money, and if this is all you get from this webinar, especially if you are in step 1, then it's enough meat for you to change your life. Many people are struggling with investment, growing money, or essentially their financial progress, because they are misinterpreting the meanings of financial instruments. For example, when it comes to finances, your job is an instrument. All right, it's where you exchange time for money. It's the marketplace upon which you give money and you give time and you get money. So it's an exchange of value. That's where you make money. If you're a businessman, you create a product that solves a particular problem and you put it in the marketplace, and that product is value and people give you money. So at the end of the day, you are giving something with your time. Hopefully you can scale that, but then you're getting money. So that's making money. And when you're making money, you can start with X and end up with 100X at the end of the year. So you can 100X your capital in a business very, very easily. You can 100X your input in a job. For example, you start as an entry-level graduate employee making 60,000 naira per month, and as you go over time, your salary is increasing to the point is 200, then 500, then 1 million per month, then 5 million per month, still giving the same fixed amount of time, right, theoretically speaking, but the amount of money you're making for that value can actually increase. That's making money. Growing money, on the other hand, is what we do with the gain that we get from making money. So you should have made money first so that you can put that money into investments, capital preservation, growing, and things like that. The stock market, all those things fall under growing money. But because of the advent of technology and the access to platforms like for retail forex trading, like cryptocurrency speculation, like the stock market, like fintech apps that give you access to the stock markets and basically the financial markets where money is grown. That's basically where you grow the money in the financial markets and investing. But because we have access to those instruments that bring leverage without necessarily putting so much time into it, a lot of us have put the cart before the horse. And so what they are doing is they are trying to make money with instruments that were designed to grow money. I'll give you a good example. Forex trading essentially, traditionally, was designed for growing money. It was designed for people that had money. For example, the banks and institutions that have all your money, all right, and they need to somehow keep that money, the value of that money, above inflation, and also return an interest to the depositors. So they needed some way for them to be able to grow that money. High net worth individuals Maybe they have like $1 million in the bank. You need a way to grow that money at least above inflation such that you can preserve the wealth. That's where trading came into play, forex trading. Oh, I have 1 million naira. Maybe I should put 500,000 in US dollars because the value of the dollar to the naira is actually increasing. Maybe I should put some in gold because that's a store of value, for capital preservation over the long term to diversify my portfolio. But you see, all these things are coming on the backdrop of actually making the money. And that's why you see most of the ultra high net worth individuals are people that are primarily very successful in one or a number of businesses, because those businesses are the things that fuel the investment, and they're not primarily focusing on the investments. Really, they're focusing on their primary business, and then whatever they do with the money, Elon Musk can take 44 billion dollars and go and buy Twitter. Either he got that through debt or part of equity and all that, but the idea is he's made a lot of money and can make those moves. You can take that money and put it in some assets so that you can multiply it. Okay, so that's making money versus growing money. So if you find that you've been struggling in investment, this may actually be your salvation. For example, I'll give you my personal story. I've been trading forex for a long time. I started trading forex in 2005. I learned it as a very young teenager. Was I a teenager? I wasn't a teenager then. But it was fascinating to me that one could make money in this particular way, like sitting behind my desk and just bring that money from the market. So I started trading forex then. And then after a while, after I finished university, several years later, I started trading forex. I was working, but I was also trading forex. And what I realized was I was a consistently profitable trader, but because I was trading with 50,000 naira, 20,000 naira, then sometimes 100,000 naira, I wasn't making enough money to support myself. So if I made 10% in a month, which is actually incredible returns in the financial market, if you can make 10% per month, it's like incredible returns. If you just imagine you found an asset that could give you 10% per month consistently. But that's normal for most forex traders. They know how to do that. The problem is that you're trading with 100,000. And 10% in a month of 100,000 is 10,000 naira. And 10,000 naira cannot do jack. Can't even pay for the NEPA PHCN bills for the month. Not to talk of surviving on that money. So what most people want to do is make 100%. I'm trading 100,000 naira, so I want to make 100,000 naira. At least that's 100%. Assuming that's enough for me to feed and survive for the month, I need to make 100,000. That's do 100% of my account every month, and that's where the pressure comes in, and then your emotions get in the way, and then you begin to make silly mistakes and errors in judgment. And that was my problem, because I needed to make enough money to put the lights on, and then at the point I got married, I had a kid, and I was like, at some point it occurred to me after I stumbled on this particular principle, that if you are struggling with your finances in the financial market, it's likely that you are trying to make money with an instrument that was designed to grow money. And when I understood this, I now focused more on my primary active income. So that's what we call active income. If you look at any of the things that I do, and for those of you that have followed me for a number of years, either it's in crypto, either it's in network marketing, either it's in travel, whatever it is that you found me doing, you realize that I'm more emphatic, I'm more focused on the active income aspect, but I always want to have something that can grow the asset. So when I was in network marketing, my plan was to do the active income, which is actually the day-to-day sales, day-to-day team building, make money. This was like donkey years ago. Make money and then take out of that money and begin to invest in real estate and stocks. That was my primary plan. Then I'm talking 2012, 2013, and I got good success because I was making money. I was doing business, and whatever residual income was coming from the company on the back end is supposed, to be saved up. That was like my passive income, and I was going to save that money and then use that to start investing on this. And I had this plan, but then it was an 8-year plan. Then, growing my money 8% per year in the stock markets, and I was going to be financially free in 8 to 10 years. And I had that plan. But then I was thinking, all right, when crypto came on the scene, and I was like, no, it's possible for someone to actually compress this time. Can I compress this 10 years to actually 3 years or 5 years? And that's when I started, looking further into different systems, and I got into crypto, and I learned about, speculating on crypto, flipping coins, trading. I didn't know how to trade, but investing and speculating, short term to grow and double your money and all that. Okay, so what am I saying in essence? You need to have an active skill, active business, and focus on that. It's easy for you to 10x your business in a year if you focus on it. It's easy for you to 5x. All right, and when you do that, you can have enough money that you can now put aside. And whether you're investing in real estate, investing in stocks, investing in crypto, it doesn't matter. The point is focus on the active income, and then you will have enough to survive so that you will not be forced to eat your seeds, before they germinated. And that was the problem I had. I grow my account, but then school fees time comes or rent time comes. I'm forced to sell off all my profits, to pay the bills, and then I start from scratch again. All right, so I have spent some time on this, and I hope it really makes sense. If it does, just type yes in the comments so I know that you're getting it. Okay, so that's step 1. Step 2 is to manage your money. Number 1, you need to learn how to make money. How much are you making? Number 2, what's your relationship with money? All right, how are you managing? How good are you at managing your money? Many people talk, for example, if you just make enough money, saving will be easier. Barring any self-sabotage and all those, let's say strongholds, habits that you have. All right, if you're a reckless spender, making more money will not help you. But for the average decent person who's disciplined and just trying to get ahead, if you made more money, because your needs are finite, your basic needs are finite. There's only so much food you can eat in a day. There's only so many clothes you can wear. Do you understand? That you need, actual need. So if you made more money, you should be able to cover those needs, and then you have some excess. You can still spend on your lifestyle, but you would be able to say, all right, this amount of money goes to my savings account. And what I recommend that has helped me for sticking and being consistent with savings is that you must have a purpose for every savings that you're doing. Don't just save, okay, they said it's good to save. No, you need to know why you're saving. In fact, label the account if possible that this is a rent account, and you know that your rent is 600,000 in a year, so every month 50,000 goes into this account. All right, once you do it that way, you know that this is rent account. It would psychologically, it will be hard for you to dip your money there. But if you just have savings, you always feel like I can replenish it. I just take out of it, I can replenish it. So save with purpose. This one tip will help many of us. All right, have one account for projects. So I want to buy a freezer, a deep freezer. Okay, so save it, put it in your OPay account or your Piggyvest account, right? And save towards that. So that's project savings. I want to go to school, and you're saving towards it. I want to japa, you're saving towards it. Okay, so project savings. And then for the purpose of wealth creation, financial freedom, I recommend you have a freedom savings account. An account where you put money every month with every income that you have, or every month, put a predetermined amount or percentage of your income in that account. Money that goes in there never comes out. That's not an account that you are waiting at the end of the year. No. This is for freedom. Because I'm going to show you something in the next step, which is step 3, that is consequent on this freedom savings. For most of us, we are not able to take advantage of opportunities, not because the opportunities don't come and you don't spot them, but because when you see those opportunities, you don't have ammo, you don't have gunpowder to fire, you don't have capital to take advantage, to get in. All right, and for many opportunities that would really be life changing for you, the gain, the advantage is secured at the beginning. Buying something at a bargain, for example, a real estate developer can come and say, hey, I'm doing an off-plan property, and for the first 50 people, we're giving them this 50% off and all that, because they are trying to, raise capital. So that's basic tactic in the real estate market. But if you don't have the capital, you have to wait until you can save up, and then that deal is gone. Or you see a stock, or that is supposed, that this stock is undervalued, it's supposed to be at this price or at least higher than this, but then for some reason, maybe CBN or something happens, a regulatory agency does something, and then the market panics, and that the share price of that company dovetails. But that's like an opportunity, all right? But you don't have money to take advantage because you haven't put that money aside. So that's the importance of freedom savings, because when that money is aside, you can begin to take advantage of opportunities when they come. I've missed a lot of opportunities that I was able to spot them. I trained myself to spot opportunities, but I didn't have money to take advantage. So, and you're going to build that discipline by having a dedicated account for freedom. All right. So now every month, every income that comes in, I have a percentage that goes to my freedom savings, and that money is only meant for investments. It's only meant for investments, wealth creation, and all that. If you do it this way, wealth creation will become a lifestyle, because every month that account is being replenished, is being increased. So even if you make a mistake in month 1, there's money coming in month 2, there's still money coming in month 3. And if in month 4 you make a home run and you hit it on a serious deal that yes, it's confirmed that this thing is going to skyrocket, guess what? In month 5 you have more money that you can use to increase your position. But wealth becomes a lifestyle, and you can now learn. You can learn by doing, which is the best way to learn. That's how I've learned everything that I know, is by actually doing it and not just talking about it or watching videos about it. All right, so that is step 2. Number 1, make money. Number 2, manage that money. And number 3 is multiply the money. All right, so I've hinted on this already. Once you have a freedom account, what you can do next is you have ammo, and that's capital. You can begin to deploy it, even if you don't know what you're doing, right? If there's 50,000 every month for you to put into the financial markets, one day you are going to get one of it, right? You understand what I'm saying? It's not a one-time event. Oh, but see, I've saved 10 million naira. What can I put it in? Many times those people always lose their money, because even if they do one deal that makes 10 million to become 20 million, guess what? Because of that mindset, they're going to take 20 million and look for the next thing that's going to 10x the 20 million. So it becomes this one hit kind of affair, where it's either you make it or you lose it all. But wealth creation should become a lifestyle, and once you do it that way, it's more predictable, it's more stress free, and it doesn't need to impact your lifestyle. You just know it's this thing I do, just the way I go to church every Sunday. Every month I put this money here, and either I'm adding it to my shares stock portfolio, or I'm adding it to my crypto portfolio, or I'm leaving it there for future use. So I recommend that you invest. If your goal is financial freedom, invest in cash flow assets and grow that. Invest in assets I only buy assets that can pay me money. So even though I may buy some growth kind of assets, like buying Tesla is a growth asset, as a growth stock, because they don't pay dividends, but Tesla can go 20% increase in a year, 30% increase in a year, but they don't pay you dividends. And it's the same. Buying a growth stock is just like buying land. It's like buying land and saying, okay, let me buy land, and even though I put down 5 million to buy maybe 2 plots of land in Ekpe, I'm tying down the 5 million in the hope that in 5 years time, one plot may be 10 million, and then my 5 million has become 20 million. But the problem then is now you have to sell the asset to get your returns. Okay, so that's where the issue is, because it's like saving up stuff, and then later on you lose everything. But the game of wealth is actually ownership of assets, not just trading. If you buy now to sell later, well, what you're basically doing is trading, and you will always need to have the next flip. You always need to be looking for the next flip. Or if you just get, for example, buying a cow and rearing it to sell for Christmas, is like trading. But buying a cow and processing its milk and selling is more like cash flow investing. So you buy the asset, but the asset can produce income for you every single month. That's what the cash flow asset is, such that you won't be under pressure to sell your asset for you to meet your basic needs. The asset is giving you a stipend, just to maintain, and then as you're accumulating your assets because of your savings strategy and that principle of the freedom savings, every month you are increasing your portfolio. Are you seeing? So you can invest in the stock market, invest in crypto, in real estate, in agri, whatever it is, in businesses. You can invest in other businesses. You can invest in financial markets. And my favorite way right now, what I call the predictable way that I grow my money now, is by managing it myself. But that comes on the back of acquiring the skill. So you can give your money to people to manage for you, put it in the mutual funds, buy an index fund, like give fund managers to manage your money. But if you just, right now, there's enough information and technology for you to actually manage your money yourself and outperform all these other institutions. Like the best institution I think so last year probably was this Stanbic, or one. It wasn't the main fund, but they had a particular fund that did like maybe 40%. But that doesn't happen every year. All right. So on average, you would see maybe 15 to 20% in Nigeria. Okay. Let's say 10 to 20%, but at least you're seeing some people that are steadily getting up to 20% in Nigeria per year. And if you are not getting 20% of your money in Nigeria, then just know that you are losing value, because the inflation is over 20%. Year-on-year inflation yesterday was 30. Last year was 30%. It's 30% as according to the central bank. So if you're making 20% on your money and inflation is 30%, that means your money is actually losing 10% of its value. But if you're in US and you're making 10% and inflation is at 5% or 5.5, then you know that you're still at least preserving your money and gaining a little bit. You're growing it. So what made me start looking at is, are there other ways for me to, you know, grow my money? Maybe it needs a bit more active involvement, but I can actually at least grow it above inflation. And if you get to hear how I'm doing it now, I'm like doing way beyond what you can get in any institution. So that's the third step. Once you made the money, you manage the money properly, and then you can now multiply. If you follow these 3 steps, you are head and shoulders above, the world, the rest of the world, when it comes to building wealth and financial freedom. Okay, now when I say you can do this in 3 to 5 years, that's because you are accelerating your freedom. You are making it a priority. Okay, and I'm gonna end this part with this slide that says optimize for cash flow. I talked about it already. Wealth building is a lifestyle, not a checklist. If you want accelerated wealth, it has to be a lifestyle. It's not something you do when you remember or you have excess cash. When you have 10,000 per month coming in, you need to be building it. When you have 100,000 per month coming in, you need to be building wealth. When that 100,000 becomes a million per month, you need to be building that discipline from where you are now of putting money aside for investment. To prioritize your active income, freelance, start a side business, make sure you get promoted at work or get a better paying job. Prioritize your active income and be diligent so you don't lose it. Alright? Build discipline and consistency, and then leverage time, not yield. Stop looking for something that can give you 100% per month. Wonder Bank, and sometimes there's a place for speculating in this thing, especially in that economies. There's a place where it's like I still do some of those things, but it's like if the money goes to nothing, it's not going to affect. I'm not going to use my rent money to do those kind of things. So those things come with some level of discipline, to play in those games. But if you don't know what you're doing, you can run into serious trouble. All right. So leverage time. What I mean by that is, if you are saving 10% of your money and investing that every month, guess what? Every single month, your money is growing, because you're not waiting for a year before you put some money in the market. You put in January, in February, in March, in April, so that any growth you had between January and February, you have compounded that in March, compounded that in April, compounded that in May. And so we are leveraging time as a multiplier factor, and not just 100% in a year. I'm not looking for something that can make me 100% in a year, right? But if I can just do something month over month, at the end of the day, the power of compound interest is going to help you to accelerate that capital. And as I said, if you don't have a steady income, make that your first priority. For you, financial independence is secondary. If you have a steady income, then you can begin to save predictably and consistently. But if you don't have a steady income, you can't save predictably. If you save for 3 months, you may be forced to dip your hand into that savings, to pay the rent in the 4th month. Are you seeing that? So focus on active income. All right. I hope you've been getting value so far. So far. So what I want to do is show you a little bit of the power of compound interest, and when I say leverage time as the multiplier factor, not yield. What do I mean by that? So we're going to go into my browser and go to a website that I've come to love. It's called the calculatorsite.com. So you need to bookmark this site, the calculatorsite.com, and just go here to compound interest. Let's click on compound interest. Close this one. All right, go to compound interest. So let's do some calculations. And when you are bored, just come to this site and or when you are discouraged. If you are in this game, it can get boring. When you are discouraged, just come to this site and put in some numbers and say, okay, at the end of 3 years, this is what I'm looking at, and you and get inspired. So let's assume you start with $1,000. You have $1,000 saved up now, and you want to start with. If you put that money in the bank, let's assume you're getting 6% per year. All right. At the end of the first year, we know that that's just $61. Okay, $61, and again, with inflation at over 20%, going to 30%, this is like peanuts. This is nothing. This is dust. All right. If you do this for 5 years, you will have 30%. So what this shows you that it doesn't make sense putting money in. It doesn't make sense putting money in the bank, apart from maybe your emergency funds, emergency savings, emergency funds, which I think everybody should have. I've learned that firsthand. Doesn't make sense keeping money, saving money, just saving in the bank. You need to deploy it somewhere. Okay, so you can accumulate money there, but then you need to have a plan to deploy it. That's what I mean. Now, I said something earlier that, okay, let's look at 20%. If you make 20% in a year, let's say you invest in stock market, average, or rent, maybe whatever, maybe 20%, a real estate investment that you do, and they give you 20%. So your $1,000 is now $1,200. But guess what? Inflation was at 30%. So that means you actually lost about $300 in value. That's 30%, but you made 20%. Okay, so you're actually left with like $900 of value at the end of the day. That's what it means. So I believe personally, but if you do this for 5 years, let's assume inflation comes down later on, all right, in quotes, you have done 160%, 170% on your money. All right, it's not bad. If you continually do this, it may take you, it takes you 3 years to double your money, and if you do this for 10 years, your $1,000 is $7,000. So that's not bad, because if you do this for 30 years, your $1,000 is $383,000. So this is a way to build wealth. If you're in a job and you're saving money and you're investing it in the stock market, let's assume the average, that's not really average, but let's just take that as upper average. All right, this can be your retirement savings. You are building your retirement plan. Okay, if this is cash flow assets like dividend stocks and things like that, rental real estate that you're investing like this, if you have $383,000 in $383,000 times 0.08 is $30,000. So that will give you $30,000 per year. If you have 383,000, let's look at this. If you have 383,000 in cash flow investments and it's giving you even 20%, let's say it's giving 20% a year, that's about what? Let me use my calculator. 383, that's like $76,000 a year. Okay, if it's giving you 10% a year, that is $38,000 a year. Can you see that? That's $38,000 a year. So divide $38,000 a year. Divide $38,000 a year divided by 12. What does that give you? 38,000 divided by 12. That's $3,000 a month. Do you think you can survive on $3,000 a month after 30 years? Obviously, inflation, we don't know what it will be then, but that's not bad. But here's my plan. What I realized was, with a little bit of skill, with a little bit of training and dedication, I can actually make 10% a month. Because I've been doing this before. The problem was I didn't know how to accumulate capital. I had a bad relationship with money. I was focusing on growing income instead of focusing on active income, and letting my growth plan be secondary. So guess what? If I can do 10% per month in a year consistently, what would have taken me 5 years to do, I can do it in 8 months. I can double my account in 8 months, because I'm going to make 100%. I'm going to make 200% in 12 months. That's if I can do 10% per month. So let's keep that. Let's assume we can do 10% per month. So keep it aside. Okay. Okay, I can see Emiza Yomi from Port Harcourt. Thanks for joining, bro. So let's assume you can do 10%. Don't think about how to do it. You just assume you can do it, because I'll show you how to do it. All right. What if you did this for 5 years? Guess what? What took you 30 years to do? Because if you invested in stock at 20% per year, assuming you're able to consistently hit 20% per year, you would have gotten 383,000 in 30 years. But because you're doing 10% per year, in 5 years, you're getting $300,000. So this is mathematics, right? The question is how can I do 10% per year? But I'll come to that. I promise. I'll tell you. But I want to just illustrate that if this is possible, 5 years. This is 2024. This is by 2029. It will be 5 years, and it will pass anyway. Okay. So if you have 300,000. If you have 300,000 times 8%, that's $24,000 a year. So this is the idea. The idea is, at some point, I should be able to take some money out of this and put it and diversify. This thing that gives me 10% per month, I should be able to diversify from it. But let's even assume I don't want to diversify. Let's assume this was in my control, because that's the only way you can do 10% per month. It has to be something you are actively managing. Okay? So let's assume you are actively managing this. After 5 years, you can make $30,000 from the market every month, because that's what it is. At the end of 5 years, you are making about $30,000 per month. So this is the amount. In month 60, you made $27,000 in that month. So let's assume after 5 years, you're like, all right, now I want to start taking dividends. But it doesn't mean you are retiring in 5 years. I'm just saying this is a 5-year plan, 3 to 5 year plan. So that means $30,000 in a month is what you are making. Can you survive on $30,000 a month? Or maybe you don't even need to. You don't need to get to 300,000 to be financially free. So I take my clients through an exercise. If you join me in the Personal Wealth Academy, I'll take you through an exercise where we're going to detail your monthly expense for your ideal lifestyle, for your current lifestyle, or your ideal lifestyle. Not anything extravagant. How much do you need per month to survive? Cover your basic needs, rent, your children's school fees, transportation, buy a few clothes, fuel, airtime, everything. Let's assume you're making you need $500,000 500,000 naira. So that's $500. assume you need $500 a month to survive. Okay, so let's look at the point at what point you started making $500 a month. This is our breakdown. All right, this is our breakdown. So let's see, you started in month 1, and this is how much. Okay, you made $10. Oh, sorry, yeah, $1,000 started with, and then you made $10. You made 110 the next month. So let's see the month when you started making. In month 18 was when you actually started making $500 a month. So you could have stopped there and say, you know what, I can do 10% per month, and that means I need $5,000. So I grew my account to $5,000 in 18 months, and from 18th month I'm making $500,000 per month. You could do this, but you could say, okay, you know what, instead of withdrawing this $500 every month, why can't, if I'm just a bit patient, it's going to take me 1, 2, 3, 4, 5, 6, 7, 8, just another 8 months to double that account, to double to 10,000. So at the end of 2 years, this 24 months, I'm at 10,000. And once it's at 10,000, I can take off my 10% per month that I'm making is $1,000. At this point, I can take out 500 and leave 500 so that I can still grow the account. That's your plan. You're going to make that plan. But if you're like me, I'm not looking at withdrawing from this account because I'm not retiring yet. I'm only chasing freedom. Are you seeing that? So if I needed to accelerate my capital in 3 to 5 years, just a plan, but this is 2 years. So in 2 years, you're actually financially free already because you're making enough money to cover your needs. But if you do this for 3 years, at the end of 36 months, your account balance is $30,000 and you're making 10% per month. That is about $2,800. Take that out and pay your rent and continue. Can you see that? At the end of 5 years, this is how. But when I'm talking about the power of compound interest, you see that at some point it begins to accelerate. All right, and the numbers start to jump. All right, difference between this and this, you see that it's almost 20,000, and difference between this and this is over 20,000. Even the same between this is almost 30,000, and it begins to jump. It begins to jump that way. All right, so this is 5 years, and anybody can do this. The question is, how do you make 10% per month? And while I'm not going to cover that on this webinar, I invite you to join me on Thursday, where I'm going to talk about the Smart Money Masterclass. It's a Learn to Trade workshop. I'm going to show you how to manage your money in the financial markets. If you're interested in that, you can join me on Thursday. Just reach out to me privately and I'll give you the invitation link. It's a skill you have to learn, but it's possible. And I'm going to give you some proof because okay, so basically that's the Smart Money Manager plan I'm talking about, where I believe you can manage your money, and I've been managing my money. At least for the last 7 years, I've been managing my money up and down, but after a while I began to distill this predictable plan that does not need to affect my lifestyle. I'm a busy person. I'm running different businesses. I'm committed in different volunteer activities, so I don't have time to sit down and be looking at the chart, when to buy, when to sell. That's why I actually stopped trading crypto at the point, because I didn't have the time anymore. But there's a plan that you can trade your money like the institutions, and that's why I call it smart money. And you can make 10% consistently, and it doesn't need to affect you. At least you need like maybe 10 to 15 minutes a day, max 15 minutes a day, and then you fund your freedom account every month. So what I showed you here was actually just 10% per month. But if you actually followed my plan and you were adding maybe 50,000 naira per month to your, or let's say $20,000, what you would get at, you understand, you started with $1,000, but you're adding $20 per month. What you will get at the end of 5 years is ridiculous. All right. Normally, you should have gotten 304,000. Now you have $20. You're getting 365,000. What if you added $50 per month, which is very possible to save 50,000 per month? Your 300,000 is now 450,000. What if you could add 100,000 per month, which a lot of us watching this video can actually do? Your $300 is now your $300,000 in 5 years, now $600,000 in 5 years, which means if you were looking for a monthly income of 500,000, you would get there in half the time. If you follow this particular breakdown of adding $100 per month, let's see how long it takes you to make $500 a month. All right. By month 12, you are already making $500 a month in 12 months. But not everybody is able to add $100 a month and start with $1,000. But you can start with where you are, and your plan is to focus on your active income so that you can make enough money to add to this account. I hope it's very clear. So you see, time now becomes the multiplier. And this is some proof. This is FX Blue of one of our accounts that we're managing privately. That is not an institution. This is money that we put in a brokerage account and we're managing it on a daily basis. And it doesn't take more than 10 to 15 minutes a day. But you can see the return on this account. This is 2,722% total return over a little less than 2 years on this one account. If you bring it out to a monthly return, this is actually 21% per month. Are you seeing that? This you cannot get this from an institution. You are going to have to manage this yourself. But with the information that is out there right now, we actually now have tools to know how the institutions are managing their money, and we can follow suit. And you can do this in less than 10 to 15 minutes a day. This is another account. These are personal accounts. This account has done 183% in the last. I started this in July, end of July or early August. It's about 8 months. All right, and this has done 183% in the last 243 days. If you bring that to a monthly return, it's 135. Now, why is this accelerated? It's because we're trading at 13% per month, but we are also compounding with time, and we are funding the account. I'm adding money to my account every month. But what I'm chasing is that I'm growing the account to a point where I know that the monthly income is enough to sustain. Can you see that? And this is, I think, do I see a bomba? There were 3 accounts. Let's see. Oh, okay. That's the second account. There's a third one I didn't put there. And this is a third-party verifiable account. If you have this link, you can go and check it. FX Blue is an auditor, so they audit financial accounts. So you plug your brokerage account to this platform, and they will log all your transactions, your trades, buying and selling. They will give you the statistics, so it's easy for you to check over a period of time, how much growth, profit or loss you're making. All right, so you can see that's the third account. This is 110, and you can see this is a real account. Last time that was updated was 27. Today is 30th. Alright, so as at 27th of April, I should be able to update it right now. Let me see. As at 27th of April, that money was 22% a month. So let's see. Okay, so I just updated it right now. You can see the time, 13:01. I just updated it right now. So yeah, 22% per month. So that's like a 5% per week return over 232 days. Anybody can do this if you put your mind to it. Just take some commitment to learn and just look at balance growing. Look at the cumulative return over that period. See. Alright, so anybody can learn how to do this, and I believe you can manage your money better than the banks. I strongly believe that. Okay, so I'm going to end with one slide. This is the third part. This is under multiplying your money. And what I've done in the Personal Wealth Academy is I've broken these 3 steps into action points, into 9 core actions that you need to take to master each of these steps. So the first one is your money fitness, getting disciplined with savings. So even before you start looking for how to expand your money, the one you are earning currently, are you making the best use of it? So get disciplined with savings, get disciplined with budgeting, and get disciplined with your financial fitness. If you are in debt, how do you get out of debt? Ensure that you streamline your expenses so that you don't take on excess load. Once you are light, when you're financially fit and you are light, you are able to deploy substantial resources to build wealth in record time. That's the problem. For most of us, money comes, but we don't hold on to it. What remains after the month, at the end of the month, is not enough to build anything. Alright, so that's the plan. To accelerate this wealth, we're looking for a Ferrari kind of system, not a Corolla, not a Keke Napep, a Ferrari. But then we want to pump fuel into that Ferrari as much as possible. Because a Ferrari without fuel is actually worse than a Keke Napep with fuel. So when I say Ferrari, is the smart money manager plan I told you now, 10% per month, but you want to put capital inside it. That's Ferrari with fuel. Alright, so money fitness protocol, get disciplined with your money habits. Number 2, we'll look at your income accelerator, how to use smart leverage to accelerate your capital. So, as I talked about in the beginning, what business can you start? Leverage your skills and assets. Maybe you already have a business, but how can we expand it? How can you leverage relationships? How can you leverage systems? And then we'll look at your freedom number, which I've teased about. How much do I need to have in investment, cash flow investments, to become financially free? Alright, if you want to do it the accelerated way, I showed you, if you're doing 10% per month and you start with $1,000, putting $100 per month, you can start making $500 per month from month 13. But that's still on the accelerated path. At some point you want to diversify and say, okay, you know what, I have this money, let me take it out and put it somewhere else that is passive. Because if you're managing your money yourself, it's still active income, sort of. Alright, but it's an instrument that can accelerate your capital. And then you now deploy it. So while you're making 10% per month somewhere, you put the money somewhere that can give you maybe 20% a year. And then we work on building that. Alright, so identify your risk profile to know what instruments you can engage in. Maybe this 10% per month is just too risky for you. You don't understand how it's possible. I don't want to lose any money, or I'm too scared. We identify your risk profile, and then we can see where you want to play. Okay, it may take you a bit longer, or maybe you need to have more capital, to achieve your goals, but will end up implementing your cash flow engine. All right, so that's all I have for you today. I hope you got value. If you are live with me on the chat, let me know if you got value from the training. And I'm going to end by inviting you. So if you want to talk further about your journey, you're interested, maybe you have questions, there are some gaps in your understanding, but you're interested in compressing time frames to achieve financial independence in 3 to 5 years. That's the plan I'm on. As you can see, if you follow this plan, you don't have a problem with money. And I believe that if you can put the money problem out of the way, you'll have enough time and mental bandwidth to devote to actual impact projects, to contribution, to purpose, and living intentionally instead of merely existing to pay the bills. That's how I personally feel, and that's what took me this route. Okay, so let me know if you want to have a conversation about this. My DM is open, and you can, or just reach out, and then we'll just have a chat about it and see how to, what next step you can take. All right, but I also want to invite you on Thursday to, and I need to take this date out because we had the first master class last week. All right, so in the Smart Money Masterclass, you learn how to become a smart money manager. So for those of us who want to learn this and see if it's actually possible to do 10%, it's something worth learning. Okay, many of us, we've dabbled into trading, forex trading, and it doesn't work. Sometimes it may be the strategy that was wrong. Sometimes it may be you that was not ready. You were not disciplined and all that. But it definitely works because I've shown you proof, and this is live proof. So learn to trade like the institutions without a stop loss. Okay, it sounds counterintuitive, but trust me, I can't remember when last I used a stop loss. You can grow your wealth by 10 to 15% monthly, spending only 10 to 15 minutes a day on the charts. Okay, it's a peculiar strategy, a unique strategy that we're going to teach you, a methodology of managing money. So we're not teaching you to become a forex trader, a professional trader. No, you are whatever you are. You're a lawyer, you're an accountant, you're a pastor, you're an architect, you're an engineer, but we're showing you how to manage your money. So this is not a forex trading course, even though we're teaching you how to trade, and we're not even trading forex anyway. But you can use this strategy to trade anything. But the idea is to manage your money, move your money from assets that are weakening to assets that are appreciating. That's what trading is about. Never blow a trading account ever again. I'm going to show you how to do that. Even if you get it wrong, you made a serious mistake, you don't have to lose your account. And I'll show you how to set up those accounts the right way, and how to actually trade in a way that you can never blow an account. And that is a guarantee. Okay, and they will give you 6 months mentorship with me. But I'll give you an opportunity to come on mentorship at the end of the webinar. So this is the Learn to Trade webinar is going to take place on Thursday by 12 noon. On Thursday by 12 noon. All right. So you will get complimentary access to the Trading Fundamentals course. If you are brand new to trading, you don't know what it means, charts, pips, candlesticks, and all those, I'll give you free. I'll show you how to get access to that for free. All right, and then you get access to our trading community, which is called No Limits Markets. So reach out to me on DM on Facebook, or you can WhatsApp me. My number is on the screen. If you want to ask questions or you want to enlist for this, I can send you the Zoom link. It's going to be on Zoom. It's not publicly broadcasted. It's going to be on Zoom for those who register. All right. So thanks for joining me today. If you had fun, if you learned something, let me know in the chat. I do look forward to the times where we are going to have more interactive sessions and people asking questions and trying out these things, how to manage your money yourself, and what your experiences are. All right. So with that being said, I want to thank you. We've passed the 1 hour mark, and we've got to shut it down. I'll be here same time next week on the same topic, showing you how to build wealth from scratch in record time, how to accelerate your capital, how to build financial freedom in 3 to 5 years rather than 10 to 20 years. Thank you so much for joining. I've been Adeposi, and I'll see you on the next one. God bless.